Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Wednesday, the 15th of April. Starting off with Arcontech Group, where you can see that there's been a recovery of the 200-day moving average at 0.18 pence. That's the black line here, and this comes in the aftermath of this bear trap gap reversal from below December and January support. That's around the 0.13 level, and the fact that we've had a failed gap fill here with the latest price action does suggest that the shares are back within this rising trend channel from the beginning of last year, and that while above 0.15 pence, we're looking for a 0.3 pence zone retest, so that will retest the spike of the beginning of this month. So quite an encouraging picture there at Arcontech Group. Next up is MX Oil, where we're seeing progress after the extended reversal, or extended decline actually, from September to January. Then the recovery of the 50-day moving average quite cleanly, and then support points above it for February, March, and going into this month. The view now is that this is really an inverted head and shoulders reversal. That the main support here for the stock should now be towards this February high, which was 2.84 pence, and while we're above that, there should be a decent rally. Initial resistance, obviously, the old 5 pence zone from September, but actually on offer at the moment, an 8 pence target, which would be the top of this wide rising trend channel from the autumn. So encouraging picture there. The stop loss on the bar argument currently, as I said, the former February high, 2.84 pence, but for those already in the stock, you can trail the 10-day moving average, 3.15 pence, as your end of day close stop loss. Shares are very overbought at the moment. 84 out of 100 is pretty cooked, but any dips towards, let's say, the 3.5 pence zone, towards the 10-day moving average in the first instance are or would be regarded as buying opportunities. Another point to notice is this rising volume that we're seeing over the last few sessions. Next up is rare earth minerals, which I know is a favorite amongst many private investors. This is also trying to break back above its 200-day moving average. That's currently at the 1.16 level, so we just clipped that yesterday in the price action, bouncing off the 10-day average as well, 1.1 pence, 1.111 pence, and that is also quite encouraging. So this looks like a sort of a bull flag situation, a positive consolidation. 1.6 pence was the previous target on the shares, and even though we've had the blip and we failed below that on the first attempt, I think that while we're above at least the 1.05 pence level, the latest swing low, then one would expect the target to still be in play at 1.6 pence over the next few weeks. Red Rock Resources, I thought I'd include that just because of the high volumes that we've had recently. This is looking not quite so healthy as the other stocks we've been looking at here, but a horrible candle here, this sort of bull trap candle that we've had back below the 50-day moving average. So one would really want to see this 50-day line recovered before thinking of the stock as a long prospect again. This is at the moment still looking as though it's in a negative flow here, with a descending price channel back towards the 0.05 pence area. Happier situation with Stellar Resources. I tweeted out the current charting position yesterday. Basically a gap fill rebound. One would be wary or be cautious that the shares remain above, let's say, the 50-day moving average at 0.34 pence. That would be the floor of this rising trend channel that we've got in place since September. But as long as we're above that, then one would still give the benefit of the doubt to the upside argument at 1.3, 1.4 pence, the target over the next month. If you're cautious on the shares, you would now wait on an end of day close above the 200-day moving average. That's the black line there at 0.58 pence before going long again. Finishing off with what may be the happiest of today's selection, and that's Verona Pharma. Great breakout here through the 200-day moving average at the beginning of February, and decent support points here above the 50-day moving average, 2.36 pence, that's shown in blue. Latest rebound above that as well. We've had a sort of a gap fill rebound as well for the start of April, and the assumption to make now is that at least while we're above the 50-day average and the floor of this rising October price channel, a 4 pence or even 4.5 pence target at the top of this October rising trend channel should be on tap. In fact, if you're an aggressive trader, you might have your stop loss just below, will have it as tight as the 20-day moving average, or just below that at 2.71 pence. That's it for me. More updates at masterinvestor.co.uk.